I take it back, you guys. A few weeks ago, I posted on here that there was no bad news for the Phoenix housing market, but I have to take it back. It does not look so rosy anymore. Not that it's all really, really bad doom and gloom, but there are some indications that things are not quite as rosy as they were before. So I take it back. Let's get into what's going on. Last week, if you were watching my video, I was talking about how we were anticipating the inflation information coming out last Tuesday. And the CPI and PPI both came out and higher than expected. It was not good news. The consumer price index rose 0.3% in January, and the expectation was 0.2%. And then the PPI rose 0.3% as well. It was higher than expected, 0.1%. And so this is bad news for mortgage rates. The markets reacted in a negative way and mortgage rates went up. And the reason that we care about all of this is because this affects buyer demand. So mortgage rates jumped to the new 2024 highs after another report shows higher inflation. So this talks a little bit about that, but basically where we landed last week was close to where we were at the end of November of 2023 in terms of mortgage rates. And this whole year we've been seeing great progress in terms of rates. We've gotten under 7%. The 8% of last October is long gone, and everyone was really hoping to be even under 6.5%. There was a lot of positivity about us getting there eventually. We had seen new mortgage purchase applications increase. Things have been really positive, and now we've lost all of that progress just because of this inflation data that came out last week. And so we'll have to watch what happens with mortgage rates this week. They may not change all of that much. I don't think there's a whole lot of market moving information that's coming out this week. But if you are a buyer out there, make sure to check with your lender, because the rate that you were looking at, 2 weeks ago may be very different than what you're able to get today. 30-year fixed is around that 7% range, whereas before we were getting a little bit closer to 6.5%. So not the best news. And so this is really where things start to change a bit. Further, markets start to speculate if the Fed move is up, not down. Now, there is no certainty on any of this, but what they're talking about is the federal funds rate. Federal Reserve said that they were looking at some potential cuts for this year after all they've been doing is hiking the interest rate over the last couple of years. And so we were pretty positive on that. And now there is some speculation that they may not cut. They actually could hike the interest rate again this year. Now, as you read through this article, it is not giving any sort of certainty that that is what's to come. There's just a few different opinions out there, and what the markets are kind of predicting based on the inflation data that really just took the wind out of the sails. So they haven't suggested that further rate increases are on the table. But as of January, Jerome Powell had said, "We believe our policy rate is likely at its peak for the tightening cycle." Now, that was before we got this inflation information. And, since then, and what happened in the market last week, there's just been some talk about, are they going to hike? But long story short, we should not anticipate them to cut rates in March. Last time we were talking about this, we were saying maybe May they would do some rate cuts. And based on the CPI and PPI from last week, we may not even see that. Now, as this relates to real estate, rising rates and home prices stifle the January market. This is according to Redfin. Federal Reserve's policy shift depressed home buyer and home seller activity in January. According to Redfin, new and active listings both fell from December levels. So again, this is national. This is not specific to Phoenix, but it's important for us to keep in mind what's going on across the country as well. And this is saying that new listings declined 1.2% month over month on a seasonally adjusted basis in January. And so when I was talking about all this positive news for the Phoenix real estate market, we were in January, didn't have the January data yet. And so far, it looks like pending sales also took a hit from December. Most of this news is not very positive on a national scale as far as transaction volume in January. This agent is saying a lot of my customers are paying close attention to what the Federal Reserve says. They came off the sidelines headlines in December when they talked about lower interest rates this year. But since then, inflation and geopolitical conflicts are scaring some buyers, and they're not seeing as much buyer activity. And it sounds like that is pretty the standard that we're hearing across the board from most agents out there across the country, where there was a lot of positivity of more buyer activity happening, and it just doesn't seem to be playing out that way. On the flip side, new construction is off to a roaring start. And this makes sense because builders are able to really ease the burden of interest rates for buyers by buying down their rate. They have enough room in their budgets to be able to give some concessions for closing costs to incentivize buyers to come buy new construction homes. And so it makes sense that loan applications were up 19% from a year ago for new construction homes. And this market is behaving a little bit different than the resale market. So we'll have to see how that plays out. In addition to that, there's a lot going on in Phoenix with new construction in terms of new permits and builders having a pretty positive outlook. So we kind of have these two different markets behaving separately. So we'll have to keep an eye on that. But let's talk about what's going on in Phoenix. By the way, if this is of value to you at all, make sure to hit that like button and share with someone who might be interested. So in Phoenix, we have our listings under contract number. This is the activity that's going on in the market. It's the buyers who are writing contracts on homes that they want to purchase. And so it's showing our demand and our activity. This little line right here, this teal line, is where we're at today. We're at 8182 for the first 7 weeks of the year, which you can see just by looking at this is lower than where we've been for the last 2 years. Last year at this time, we were at about 8877 number of listings under contract. And then before that, we were closer to that 12,000 mark. So a very big difference year over year in terms of listings under contract. The Cromford report is saying last year, the market caught a second wind in April, but it ran out of speed 2 months later. It's by no means clear what it will do in 2024, but so far it's merely ticking over, providing very little to get excited about. They also mentioned that this is not the market we expect to see after Super Bowl. Usually after Super Bowl is when things really take off. And I know it's only been a week, but so far we're just not seeing the activity that we typically do. Now, going to the Cromford Market Index, this is sitting at 117.4. And I feel like a broken record because I've been saying roughly the same number every single week for the last 3 weeks or so. This hasn't been moving all that much. And that's because we've kind of stalled out a bit on our demand increase and our supply increase. Now, supply is going up a little bit more than demand right now. Our demand is sitting at 77.7. And if we look at 100 being more of that normal range, then we're saying that we're about 23% below normal for our demand. And then as far as supply goes, same applies there, about 34% below normal for supply. Overall, if any number here is over 110, it's considered a seller's market. So we're just in this very weak seller's market, not seeing a lot of movement. And typically we see this start to take off around this time of year, but our demand is really kind of hurting our progress here. And it remains to be seen if it will pick up. If we look at every city throughout the Phoenix area, these are the major cities and their respective CMIs. You'll be able to see that Chandler's leading the pack, Gilbert's leading the pack, and Glendale. But we do still have some red arrows here. So these red arrows mean that their CMI went down. It moved in a direction favorable for buyers rather than sellers. And green arrows going upwards means that the sellers gained some momentum. And so again, same applies here. Any number over 110 is considered a seller's market. So we have Peoria up to Chandler all sitting in a seller's market. And then we've got balanced markets in Cave Creek, Paradise Valley, and Surprise. And then Goodyear, Queen Creek, Buckeye, and Maricopa are sitting in buyer's markets. Although these three here at the bottom showed some movement in a direction favorable for sellers. So they're starting to increase some momentum in that direction. So really every city is behaving a little bit different, but also price ranges are behaving differently. The Cromford report is saying the healthiest segment of the market is that mid-range market, especially in locations closer to the center of Greater Phoenix. So including Phoenix itself, Chandler, Gilbert, Glendale, Mesa, Tempe, Avondale, and Peoria. The overall change on average of all of these cities was about 5.3% for that overall CMI. Last week, it was 8.1%. So we're still reporting a positive change month over month, but it's definitely a weakening trend. So I gotta be honest, this is not what I expected to see. Usually you start to feel this momentum as we did at the beginning of the year, and then it kind of takes off at this point. And right now we're just not really feeling that takeoff. So my advice to you, if you're a buyer, check in with your lender because rates may have changed quite a bit from the last time you spoke with them. And if you're a seller, depending on where you're at in the valley and what price range your home is listed for, you may not be seeing as much demand as you expected. Even though it's the spring selling season, don't get too overzealous. If you're considering buying new construction, you may want to check out this video right here.